Hi everyone, it's Jack back on the video. Today I'm doing a stock analysis on Snap Inc., the parent company of Snapchat. As we speak, it's a $14 stock, way below its 52-week high of $83. It's down 70% year to date alone. A couple of major drops in there because of profit and revenue warnings, as most recently as May, when they issued warnings on that revenue growth wasn't going to be exactly where they wanted it to be, and the profits slightly going to be down. Market cap of $23 billion as we speak. It's just off its 52-week lows. I want to establish, is this company investable at current prices, and how does its future look? Because there definitely is a potential for this company, and there's a price that I would be willing to pay for this company most certainly. Over the last 5 years, the company has made some excellent progress towards increasing the monetization and making this company go from a successful app to a successful business. Its revenue is 5x up from 2017 to 2021, growing at a really strong pace. It's still 64% in 2021 year-over-year growth. It's now $4.1 billion, which is really impressive at this sort of scale. Average daily active users, they have 3 consecutive years of accelerating daily active user growth, around 300 million in 2021. The gross margin, or on an adjusted basis, has continued to get larger and larger and larger, now nearly 60%, and adjusted gross profit has grown more than 12 times in that period. Still not consistently profitable, as we'll speak about in a minute, but good signs everywhere to be seen here. The daily active user growth story continues to be really impressive for me. 190 million users in Q1 2019. It was by no means a small platform at this point. It was an absolute household name, and yet it still managed to nearly double its daily active users in 3 years, now 332 million, with a decent amount coming from European and rest of the world growth. Europe going from 61 to 84 million, North America going from 80 to 98 million, but the majority of that is expanding in the rest of the world. That number has tripled from 49 million users to 150 million users, and this trend looks like it's going to continue for a decent time to come. What is often spoken about with Snapchat, and really is the foundation of the thesis, is that they have a dominant position amongst the younger generation. They believe that they have the highest penetration in the most established markets. Around 90% of the 13 to 24-year-old population are using Snapchat, and 75% of the 13 to 30-year-old population in the US, UK, Australia, France and the Netherlands, the most established markets. This is really impressive, and is going to be a consistent source of advertiser attraction. They're going to want to target these, whichever Gen Z, Zoomers, whatever you want to call it. This generation, 13 to 34-year-olds, are definitely an attractive market to be aiming at. The reason for this is advertisers are desperate to get their hooks into people early, because brand loyalty is a real thing. For example, your bank, you're unlikely to change banks if you're having a good experience. So if you can be that first bank to give someone a good experience, you got a customer for life in most cases, and that is true of many facets. So from 13 to 34 years old, there's many firsts: buying your first home, credit cards, banks, careers, car, whatever. These are all things where you can develop brand loyalty early on, and advertisers are going to want to target this, and Snapchat is the absolute premium platform for this for young people. Despite having a dominant share in the 13 to 34-year-old market, there's still significant total addressable market to expand into. They have 98 million daily active users in North America out of an approximate 400 million smartphones. Of course, not everyone's going to get Snapchat, so 24% penetration is not exactly true, but the saturation point is there's definitely some room to expand. They've never really experienced significant decline in daily active users, so I believe this can move forward at a decent rate. They're not going to capture 400 million, but there is definitely room to expand. Same with Europe, they're at only 15% penetration in Europe, 84 million daily active users on 560 approximate smartphones, and the rest of the world are at only 6% penetration, 150 million daily active users on approximately 2.5 million smartphones. So you can see it's a real positive that they're managing to grow so quickly, 3 times in 3 years. And so they've gone from 2% penetration to 6% penetration in just 3 years, which is really impressive. And this is a vertical that I think they will continue to grow into over time, and is going to be a real focus. Increasing the number of daily active users is obviously important, but is also critically important is the average revenue per user, the revenue that each user brings in. This needs to continue growing. Snapchat is at some of the lowest in its industry. Meta, Twitter, all of these companies have much higher average revenues per user. But of course, Snapchat is a relatively younger company than these, and you would hope that they are able to increase this revenue per user over time. Not to mention, there are secular tailwinds for this industry. Advertising industry is moving in the right direction, going up 10% digital compound annual growth rate a year for digital advertising in the US and internationally. This is going to grow with Snapchat. You would hope they do far more than 10% growth. They did 64% revenue growth over the last year. It will be tough to exceed this in a recession, but the secular tailwinds of the digital advertising industry is only going to increase in size, and this is only of benefit to Snapchat. So we've established this business, despite the profit warnings coming up as we possibly enter a recession, has good growth prospects ahead of it, and seems like a reasonable trajectory for the future. Let's have a look at the balance sheet. On the balance sheet side, they have a cash to debt ratio of 1.19, which is not particularly strong, not ideal for a growth company, but they have a reasonable cash position, so I'm not going to ding them too much for this. But compared to the historical metrics for this is very poor. Equity to assets of 0.4, not ideal. Debt to equity of 1.18, not ideal either. This is not a perfect balance sheet by any means, but is not at any immediate risk of financial distress, and a gross margin of 60%. I believe that in the future this will have an excellent fortress-like balance sheet and will not be hard to come by profits and cash, but for now the balance sheet is weak but not at immediate risk of financial distress. So a negative but not a thesis breaker. On the profitability side, gross margins of around 60%, very strong for its history. We'll see how that holds up going into a recession, but profitability wise, all negative metrics apart from gross margin. They're not consistently profitable. They did record free cash flow in the most recent year, but I can't really give them points for it because they're not consistently profitable, which is a major weakness for this company. Generally seems allergic to making consistent profits. They want to invest in the business, and that just does not make it an attractive prospect going forward. You got to remember, this company is basically flat over the last 5 years. Yes, it was an $80 stock at one point, but it isn't now. It's flat over the last 5 years, and it's still not profitable. This is definitely concerning in the long run. And the valuation metrics reflect this. Forward P, I'm not going to pay too much attention to because that's pure speculation at this point. With a recession, with a potential recession coming up, advertising is going to look weak. You're going to see more and more profit warnings from these companies. So I think I would be concerned about this. Looking at price of free cash flow, 120, ridiculously overpriced. Even this is a fantastic value for Snapchat's history because it's not traditionally free cash flow positive. Price to operating cash flow of 84, again, very, very highly valued for. Okay, we're possibly getting 50% revenue growth yearly, but again, no guarantees going forward as we potentially move into a recession and inflationary environment. It's tough for these type of businesses, so the only real metric we can look at is price to sales. Five price to sales is cheap for Snapchat, historical comparisons, but still quite expensive in an inflationary environment. When you look at the price of free cash flow metrics, these are far, far higher than Pinterest, Facebook, other companies in this category, which I also believe are attractive investments. I just can't really justify it off the basis of these valuations. Obviously, this company has a lot of potential. It's the messaging app of choice for under 30s, basically. Huge value to advertisers. Our average revenue per user will continue to grow strongly, in my opinion, but they will need to get profitability soon. Seems allergic to consistent profits, and this is a concern for me. They don't have a very, very strong balance sheet, so they will need to continue to generate free cash flow. I think this will come under pressure in an inflationary environment. On the only real valuation metrics we have, price sales and price free cash flow, that orders of magnitude more expensive than Pinterest and Facebook. At these valuations, I would not be comfortable investing in this business, despite my belief that this company will be significantly bigger in the future and it has great potential. I just think there's too much risk here at these sort of prices. This is perhaps under $10 stock, masquerades as a $14 stock. Until they show signs of a desire to be consistently profitable, I don't really want to invest in this business. It's different from an earlier stage company where it's choosing not to be profitable basically, or it's prioritizing growth. Snapchat seems to be, it's been around for a while, like it can be profitable, and it's almost choosing not to be in favor of, AR and things, AR growth and things like that. Things I don't really think are going to be tangible values in 10 or 15 years. So I am concerned about their strategy going forward, and I would like to see some profits. If they could well turn around and surprise me, and next year they could come out with 60% gross margins, 25% free cash flow margin or something like that, I would be very impressed with that, and I would massively reconsider this, even at above $14. And I think there is definitely good return to be had here at a $14 price. It's just not my type of investment right now. But of course, I'm not a financial advisor. You should do your own due diligence and research, not just listen to what I'm saying. Like and subscribe if you enjoy the videos. Comment below what you think of Snapchat, what you think are similar, comparing it to other companies in this industry, if you think it's a buy, sell or hold. Whatever you think, let me know. I'll be interested to start a conversation. I'll see you next time.